My cop, you're no Mercedes. You be driving these little bitches crazy. You be driving these little bitches crazy. We even had thoughts on the baby. We even had thoughts on the baby. Before they say we're too damn old to be playing. Why tell me some shit if you know it's a lie? Why say you fuck with me but then leave my side? So many times when I needed you by, I was left all alone. All I could do was cry. Your love like a drug, she got me so high. My feelings too strong, put my pride to the side. I be thinking about too much, I hope I don't die. Got family who need me, we gotta survive. No bag on bag, I got it. Or me in your city, send me your deposit. They talking all they do is gossip. But that's the main reason I don't fuck on nobody. The niggas I run with, they wilder. I pray to God I don't have to step on nobody. I know that they watching, to the streets forever, I'm locked in. New money on money keep piling. This shit keep piling. New bag, brand new deposit. Brand new deposit. Fuck drip, I don't need no stylist. I don't need no stylist. Go to plug, I ain't talking about socket. No, I ain't talking about socket. I ain't on no mileage, Percocets out inside of my body. I thought about taking them Roxys, but I told myself I need to stop it. Wanna take my bitch on an island, though I never to see you smiling. When I give her what she hollering, but I never thought about going hollering. No, just want you smiling. Forever I'm with you in love with this feeling if you rollin' and rockin'. Let's run up some money together and leave out them broke bitches wild. Like what the fuck is we gon' do with a while? It's crazy how I seen $1 million. I dropped out of school and I ain't go to college. Bitch give me more nick than the college. She fucked the whole team, we put her on the roster. Can't fuck with that hoe, she got body. She ride too much dick, that girl got too much mileage. We be thinking and clutching, we up with them bustin'. I swear I'm surrounded by shots. I really got too many problems, I go through a lot of this, why I just need me a ride. Tell the truth, do you really love me? Do you really fuck with me? Tell the truth, do you really love me? Do you really fuck with me? Tell the truth, do you really love me? Do you really fuck with me? Wanna show you what you never seen. This island cost 23. New money on money keep piling. This shit keep piling. New bag, brand new deposit. Brand new deposit. Fuck drip, I don't need no stylist. I don't need no stylist. Go to plug, I ain't talking about socket. No, I ain't talking about socket. I ain't on no mileage, Percocets out inside of my body. I thought about taking them Roxys, but I told myself I need to stop it. Wanna take my bitch on an island, though I never to see you smiling. When I give her what she hollering, but I never thought about going hollering, no. Thought about going hollering, no.
TurboTax free.
Let the band play.
Yeah, my watch dumb, but my chain a little dumber. I been doing numbers. Came up in the jungle. I can't see none of you little niggas, Stevie Wonder. She pull up and suck it, then she lead you like a plumber. That nigga right there only come around cause what you got. That bitch right there, she only fucking you because you shining. It take money to make money and it's all about timing. I went and got rich, but it still can't fix everything. Doing donuts in a Ferrari in the rain. I don't supposed to be here, look how far I done came. Drop the top on that bitch just to make sure they see me. Blue diamonds all in my Cartiers while I'm reading. Turned to Michael Jackson on that bitch, told her beat it. Girl, I swear your pussy too damn good, I don't need it. Talking about you love me, bitch, please, I don't believe it. Had a bad Mexican bitch, sending bells from Phoenix. Mommy, yeah, my watch dumb, but my chain a little dumber. I've been doing numbers.
And there's doing it yourself.
Change his mind. We just have to trust. But it should go beyond that. Is there any way that you can see that what's being built out with the Fed can actually go beyond that concept, Stu? Or is it still reliant on some kind of trust on those original holders?
Well, essentially, like when I was put in a position where this kind of landed in my lap, it was basically in my control to sell it out in the right, basically sell it out if I wanted to and, lose my position and walk away. But I didn't want that. I knew that there was actually a bigger purpose in what this was supposed to mean and how much I actually held. So, I built up the liquidities with the
Yeah,
Fed,
chat, we in here,
and
chat. About to
kind of
see what
before the
Steven
dump, I
talking about,
sold a
chat.
lot of them to save
We
money,
in
right?
here, man.
And
Load
then I
them
sold
bags
the
up,
maximum amount
man.
back that weren't going to hurt it based off of what was being sold around, like say
I see you,
$2,000.
Lawrence.
I mean,
Getting that
listen,
bag loaded.
I'm not telling anyone to say that, like, hey, like, I'm not going to change course. Like, you always see me selling on and off the chart only because I have to move funds around. Just well, so basically, I do trade the chart, but like I also am supporting. So I am the liquidity also as well. So I don't want anyone to be alarmed if I'm buying and selling, but a lot of it's also I have plans to build out
What's happening,
just on
KG?
the
What's good,
ecosystem
Brody?
with a lot of affection stuff that like say, listen, if this actually does turn out to be a big forest, well then I've done Maria a big favor by building that out. So like I actually try to turn my profits around to build out something else. So like listen, I will go down with the sinking ship to say that I might be wrong about this, but like if I am like say an inkling right about this, well then this is going to pay off, you know. And I know you're okay.
Shit, I
I
just
know your
tapped
original
in. We
question
about
was,
to lock
why
in and
should we
see what
trust
the
you?
stream on, man.
You
Definitely looking
shouldn't.
for
You
a
should
dub,
trust in the code. You should
as
trust in
usual.
the holdings. You should trust in how much I'm able to sell at a time and stuff like that. But like, if I'm going to tell you from a personal standpoint, I actually want to make everyone money because like, dude, if okay, well, let's talk theory here. If someone makes $10 million, like I've been, dude, I'm getting older. I'm sick of this. I don't, I don't need a lot to get by and have a good time and just live. You know, people think you need a lot and everything to kind of just do everything. I want to see everyone succeed. If I can do that on this chain, then that is enough for me to be happy with. And I know I've done my fucking job. That is the bottom line. I want to see everyone win, and that's exactly why I built the system I did with the FDIC tokens out. And
Hey,
we'll spend time
E-Hex on
talking
some
about that in
monster
depth when I
shit,
actually have
man.
a plan so that people understand what
E-Hex
I'm
on
talking
some
about and can make
monster
money off
shit,
of it.
chat.
But, you know, listen, invest how you feel. Know that, like,
You know,
essentially. Sorry, go ahead.
E-Hex look like it
I
wanna
was just gonna
rip.
say, that during Germany's hyperinflation,
Can't go
speculation
wrong buying the
became
E-Hex, bro. Can't
like
cap.
the way to go about trying to make money. Like people start to not respect working for a living because the fact is that your work doesn't get paid enough to even survive. So it fuels speculation. So I believe we're in that process right now of watching the dollar probably at some point it will cease to exist. Um, so with that, when you were talking about the reason I brought it up is you had said I'm not interested in making a lot of money. Well, what is a lot of money these days? What will it be in 2 years from now? In 5 years from now? Well, bro, if
My boy got the ads on his stream, boy.
To date, very good venture exposure.
and then overnight your money's gone. And
Dude,
we're at the point now where people are not, earning enough to survive working a full-time job.
and I'm trying to right now, I established right like
But yeah,
early
chat,
on
I'm
that
buying
like
more.
I
About more
work
E-Hex today.
towards wanting to be free
I think
versus
I'm finna buy some more
wanting to have a
again,
dollar
but
value. And there's actually a difference
definitely
in
got
that
some
understanding.
E-Hex.
And the moment you realize that there is a difference
That's
in
what I
how
bought. I
you
bought
look at
more
the dollar
E-Hex.
and how you actually look at token
I
count
don't.
and how
You
much
can't really go
you
wrong
actually
with no
gain versus
E-Hex, chat.
lose,
This motherfucker been
there's
holding my
you
entry
see
since
things in a very fucking
goddamn
different
it
way.
24. You know what I'm saying?
And
I've been
it's
holding
it,
this
it, and it's
position for a
almost
whole
crazy in
year.
a sense where
Lovely, you feel
you're
me?
blown
So
away by like, wow,
stacking
I
on that
can't believe I
E-Hex.
actually looked at it this way.
Definitely got to
The
Let me
old
use
ask
habits
all you
confirm
guys
that this is it
a
on
question.
E-Hex, chat.
If the
Look at this
dollar were
weekly
to
trend,
die,
chat. This weekly
does crypto still hold
bullish.
value?
absolutely, because we're not relying on the dollar. Our charts do not rely
What
on the
can you
dollar
buy with crypto right now?
because it's not only that. If you look at rate, we rely on ratio. Like if you trade based on ratio and not dollar value, that's where you
But,
win
but wait,
in
wait,
crypto.
wait. Hold on one
I
second.
I
Yeah, go
agree
ahead.
with what you're saying, zombie robot.
Should do
Without
it on
something
his
to
own. I'm not going
transact through
down
into the real world, like all of this
with
is just
no.
it's meaningless. And my position is definitely pivoted from previously being like antagonistic against the US dollar to
No cap.
like
I
we
feel you,
need to
KG.
harmonize with the US dollar. I would rather a world where we don't overturn everything now and just say, okay, we've built all this up, let's turn it all over. I mean, even this whole PDI narrative, right? It all relies on the fact that we have a stable US dollar. So I would rather a system that works with that existing system but makes it better. That's the kind of world that I prefer, not,
Well,
oh, let's overthrow. That was my
problem
previous
You mean swap
Steven,
perspective.
what?
But
the
Swap
yeah,
problem
what?
is
go on.
though is like the problem is that we can prefer it all we would want. The fact is that the dollar is a scam. It's a fucking
Oh, yeah.
scam. And so why do we want to keep a dollar? We don't. It's not honest money. Gold and silver are honest freaking money. They always will be. They always have been, and they will remain that at the end of the day. At some point, that is the final life raft. Because like you said, you can have all the crypto in the world. If you can't turn it into a real world asset, then you got nothing.
Yep. Yeah, and I think that's really that's a bigger issue than what we could possibly solve within this ecosystem. I think so. We're kind of all just relying on that continuing to exist at least for at least another cycle or two. Because if that all goes down and all we're left is with crypto, then this is just another Ponzi scam as well, with just lots of fake numbers that you can't even transact into anything. And then people's worst fears around crypto. I mean, that's the number one common thing that I get. Well, you've got all this thing on crypto. Can you take it out and buy a house? And it's like, well, yes, you can. You can. There's
Hmm.
a few steps, but you can.
Yeah,
And so it
yeah.
has to. Yeah.
You can
So
do it now, but you can do that today. What
yeah.
happens when they print when the next round of printing, bro? What happens if we get another inflation bout? Oh, I can't hear you, Steven.
I didn't say
You could
anything.
cop a
Oh,
car
I
with
saw you.
that
You know what?
shit.
I
All
might be
type of
off on
shit.
the
Niggas be
on my
taking
camera.
Ethereum,
The
Bitcoin,
next
and
round of
whips,
inflation. What
cars,
happens if
houses.
we get hit like we did 2000 to 2000 or I'm sorry, 2020 to 2025?
Man, I'm
What
buying
I mean,
E-hacks, man.
bro, people can't handle another 50 to 100%
I'm buying
loss in
more
their
E-hacks. I ain't
purchasing
buying none of this
power.
bullshit. E-hacks
Like
gonna chug.
there, something dramatic is
E-hacks
we're
holding
headed towards
well, man.
a serious crisis.
This
Something
motherfucker
that none of
moving
us
with
can
Bitcoin
predict,
charting
I think.
some old shit.
Definitely. And I guess again, it's probably outside of the scope of what we can really, what we can really address in this particular stream.
Yeah.
But I want to just kind of pull it back here to going back to the Fed. So the point that I was trying to ask Stu is, and you make a good point. So it's not just about trusting you. It's not about trusting anyone. It's about what. Okay, so you're saying you've built out a lot around the Fed. You're thinking of doing it with FDIC. So, for example, the Fed has nearly 100 in liquidity. I'm quite sure FedEx is yours. Is that correct?
So hold on. Before we go forward, Steven, the only reason I bring this stuff up is regardless of whatever I say based off of whatever I do, there is still a majority holder in the whole situation, and that is Maria was 25 billion. So
Of course.
that's all I kind of like. My whole thing is basically saying like, regardless of whatever I do and all that stuff, like you also have to remember the risk of like number one holder 25 billion can do a lot of damage to what we build. But in this case, they actually said, hey, this is open for community, so we have to hold them at face value for that. And they know, like I said, I'm top holder, and we can kind of work on that once we maybe get there. I've been talking to them today. That was yesterday. So you said, how can we kind of keep moving this forward, right?
Well, as in, so okay, if you're a top holder, And one of the points that you made was, well, you can't even sell enough out of there to destroy the chart. I like that point. I think there is a lot of smoke and mirrors with the Atropa ecosystem
That shit gonna
liquidity.
be 1 on
But what
1.
else can we see from that?
If
Let's
not,
say
that
we
whole
don't know,
shit gonna be
Stu.
fucked.
We
So
see a
we all
top
gonna
wallet
be
holder
fucked.
here with 10 billion tokens. We don't know that that's you. What can we see? Oh, well, this wallet, okay, they've done this, and this, and this, and this on the blockchain. That if you put those pieces together, it's supposed to be trustless, but you look at the actions of that wallet holder, you look, oh, they've created all these tokens. It's probably not in their interest to actually dump it. It's in their interest to live off this into the future. So how is there any way that we can see on the chain or verify that actually this is something that's probably worth looking at in a different way? Does my question make sense?
Well, it's kind of hard because like you can't ever really say that this is the biggest part about crypto is that like people always hold everything that everyone says the face value. And like, dude, and I'm telling you right now, like we're coming out of the bottom, and this is what I'm telling you.
This shit gonna be
So like,
crazy.
I have nothing to benefit from everyone buying right now. Like you get what I'm saying. So
Sure.
So it's kind of like people are louder at the top. People want you to sell at the top. Fuck. It's just
Okay, I guess what I want to ask you is let's be more clear. So what have you built around the Fed that would convince people that you're here to protect the Fed rather than destroy the Fed?
okay. So I actually built the reward token to actually cushion sells against it. So that was like why I built FedEx, right? Why I have a majority holding. So essentially, if I wanted people to build stuff for me, I could pay them in FedEx rather than Fed. That's the reason why you build reward tokens, so you can actually protect your majority holdings of a token. This is kind of why reward tokens are made. So they kind of cushion the sell. So I tell you that I actually built a whole like system of reward tokens based off of every one of the tokens on one of those, like on the list that you proposed, from like the FDIC all the way to bar. I actually
So
didn't
for
do
example,
bar. Bar
FDIC.
was done, yeah. I did all the way to the last one before bar. But the thing is like these tokens are meant to be minted and sold all the way down to mint price. And when I say mint price versus like how much it costs to mint, how much value made, blah 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 blah. I'm sure you can do the math on that. But I created the rewards tokens on these to actually cushion the blow against these sales over time. Might take a little bit to get there, but like the true value to actually hold the token itself. So as you gain more of these tokens, say one day it cost, I don't know, a couple bucks a mint because the price of PulseChain has absolutely skyrocketed. Well, then it actually works in your favor to buy the token versus minting it, So this is where the arbitrage is going to lie one day, because
Need 40 billion to peg P that.
The gas is going to absolutely skyrocket, and this is where I want the game to lie. Is people to understand that there might be arbitrage between, minting from one token to the other to go from, like, say if it's say if the FDIC is 0.001 and DFM is
Niggas got billions sitting around.
Well, that's a 50%. Or sorry, that's 100%. Or sorry, that's a 2x if you sell your DFM back in the FDIC. Right. So these type of theories are kind of like thing that kind of work down the line. So essentially, all those tokens down the line should be the exact same price. That's the one-to-one math in it. And then, in theory, all those tokens should be one-to-one with Fed because they're all minted one-to-one. But like, basically, that's just not how it is based on price, right? That's only based off of the theory of the contract and minting it.
So, I understand this. So basically, what you've done for all of these tokens up until Theater
cheap,
or Taheda, you've basically built a tax token So for the Fed, you've
Like
built the
it's cheap.
FedEx, and then you've built around the FedEx as well. You've bonded that with a whole bunch of different other tokens. And the idea is instead of selling down the Fed, people would sell down FedEx, or you would sell down FedEx, and then you have that same thinking behind all the different tokens. Is that correct?
Well, actually, that's kind of the beauty of it. Is that like I don't need to sell FedEx. FedEx attached to a bunch of the from Ethereum tokens. So like essentially, I can make my money when FedEx pumps just by selling Ethereum, or sorry, Uniswap and XRP wrapped from Ethereum into the chart because there's actually arbitrage value in those. And there's a lot of those little things I actually put in a lot of my coins so that when they go up, there's arbitrage in those coins without actually selling the physical charts down themselves. So I actually.
First, I want to talk to you about 8 Sleep, whose pod technology can be added to your existing mattress to cool you down or warm up each side of your bed. Nothing ruins my night's sleep more than being hot, sweating into the sheets. With the Pod 4, that's no longer a concern for me. That's why I like the 8 Sleep Pod, which gives me the ability to fine-tune my sleep setup. You can actually add the pad to a bed and mattress you already own, so no new mattress or bed frame needed. Once it's in.
And if that ever goes up.
So I essentially built the FedEx around a lot of from pairs. Actually, I built the whole FedEx around the from pairs, the event that, say, Richard Hart brings all those from Ethereum farms back. Well, then FedEx will do really well, which will drag up the Fed. So, like, I've done things.
I definitely think the bottom end, though, for sure.
In order to make sure that there's always arbitrage, like opportunities that, like, I don't actually have to sell down the Fed itself. Right, so like to put it this way, so if a Trump pumps, the Fed pumps, and it drags FedEx with it. If Richard Hart launches the exact same farms, then FedEx is gonna absolutely fucking pump because I'm pretty sure it's either one of the top holders or the top holder of, like, say, I think Uniswap.
This next leg up, hey chat, this next leg up for make us most of the cheese, man. Like the leg from November, that was nothing, bro. Nothing, you know what I'm saying? But yeah, we're gonna come back to my boy Steven. Let's lock in with some other knowledge real quick.
Brothers and sisters, welcome back to another video. Today I want to talk about the next leg up of this bull market, the one that's gonna make most of the money this far, and especially if you missed the actual 2023 and 2024 rally. And I'm gonna share with you here why I do think this is the case today and why I do think we're seeing now the all out of their closets again. But regardless, Bitcoin held strong above 76k, and most importantly, recently we've seen it reclaim back above 80k. But what I want to show you and why this is the beginning of the actual last leg, the most strongest leg usually in the bull markets. This is, by the way, where we've seen Shiba Inu pull a massive rally back in the days here, where we've seen this massive rally on Shiba Inu. This happened on the second most strongest leg of Bitcoin back in 2021, and this is what causes usually massive rallies on altcoins, like 100x's and those dream pumps that we remember. So is this the actual beginning of that? And to answer that now, guys, you can see how strong Bitcoin has been now recently, especially after we've seen this massive crash on the stock market. Bitcoin held strong above 75k, now back above 80k, 84k. This shows a lot of strength here, a lot of demand And also we're seeing now slowly cryptos starting to mature and run out of sellers. Even coins and altcoins. I've seen recently Fart Coin now. Fart Coin, that after a massive collapse, people thought that this was dead. Now I'm seeing a lot of noise around it on Twitter, that people now talking about it because it started rallying, closing in onto that 1 billion. Even low caps recently, like Brett on 8, seen this massive rally and then back again, bouncing off this floor here. A lot of things that tells me, look, baby, the market has had enough of these dumps, and maybe we've seen the bottom. As I've been saying on my videos recently, as you can see, guys, you cannot disregard a 20% drop on the S&P, 21% drop, and that caused the Feds to come up. That caused as well Trump to say that we are posing the tariffs. We're seeing more and more news today about how Trump is gonna back off from the tariffs, and how are they not gonna implement tariffs on chips and electronics and all that stuff, which is just a slow backing off, let's say, as Trump doesn't like to look like a fool. They want to back off slowly from the tariffs as the market recovers back up. So what I want to show you here, guys, if the market recovers back up, which I strongly believe it's gonna do,
that Fart Coin went viral. That's
time,
funny
guys. This
as
is what happened last time. Shiba Inu went crazy back in the days here. We had a massive meme coin season, especially altcoin season. We had coins doing 100x's, 200x's. We got like Axie Infinity doing as the same thing, gaming coins, all sort of coins actually rallying. So that's what I'm waiting for to happen here, and why I am even more bullish here, how it as well is bouncing off that swing failure pattern that we've seen here. Took the lows here, back from here, now coming back up. And what I want to show you most importantly is the global liquidity breaking out. This is very massive. This is usually precedes bull market. And if we overlay this on Ethereum here, as Ethereum shows us basically when we have an altcoin season, as it's the largest crypto basically. So back in the days here, before the lockdowns and everything, the global liquidity broke out, as you can see here, and it caused a rally on Ethereum. It did as well happen before the 2017 bull market. We had this phase here where Ethereum was also underperforming, took out the lows, and global liquidity was going down. But later on, global liquidity picked up, and then we had a bull market there. And then again here we have the same thing pretty much that played
made
like
chat
today,
go away, my
was
nigga.
kind of tightening up. For those that do not know, this
Buy
is
and
basically shows us how
made
much money is
go
circulating
away,
in the world that is
nigga.
kind of might end up buying cryptos, and usually it's very correlated to cryptos. And when you see this breakout, it happened before the actual bull markets. This is Ethereum going nuts here, going crazy with the global liquidity.
Telling y'all what, I seen it. I said that shit, bro. I said they gonna do some shit, bro. They gonna reverse psychology this whole thing. Buy and made, go the fuck away.
That's one of the major reasons why. And even though we had those little pumps here on the global liquidity, which also caused rallies, and we had these that caused the rally, then had this that caused
good
the
with
rally,
NBA
and
Young
we have
Buck,
another
man.
one. But this one, guys, is the crazy part, and this is what I've been talking about recently, is the breakout of the global liquidity now. Now it's breaking out, telling us this is what's gonna come next. This rally here, especially that we're seeing the Feds are looking at saving the markets after the S&P crash and the tariffs and all that. Pretty much this is what this is telling us. Now a lot of people have been bearish recently, and it is very normal to see that. This is the markets, this is how the markets work. When we have green candles, everybody calls for 300k Bitcoin. When we have red candles, people call for 10k Bitcoin. So the market psychology is based like that, and that's why I like to look at the global liquidity, Ethereum, other coins. Most importantly, when I look at the global liquidity and I look at the market and what people think, and we have this like extreme fear, irrational, the tariffs, and I know the crash was caused by the tariffs, and I look at each irrationally going down, I know we're gonna have a bounce. I know this was just
people don't think Bear gonna explode, and it's cheap as fuck.
The last one basically,
it's beyond cheap.
People actually got
it's
themselves
like
out of their bags
at the start of the damn launch cheap.
They will not participate in the actual real rally, and that's how the market works. The market does not make everybody rich. So at the highs, everybody
super cheap.
At the lows here, everybody's
gonna explode.
Only those, the few that actually understand or actually have a bit of, or have been around. That's why they say you need 3 cycles to actually actually make money in this crypto space. But I'm trying to do my best here, just sharing with you what I've seen previously. But when you see this, pretty much whenever people are irrationally bearish at the lows, I know we're gonna have a bounce. I know this is not the low. Also, when we have extreme foolishness and extreme,
what coin y'all think is gonna be that coin that explodes?
A cool off pretty soon. We might see a cool off very soon. So it's pretty much how this works. And the biggest catalyst, as I said, is actually we're still waiting for the rate cuts to happen. That's the major thing. We're still waiting for the rate cuts to happen. That's gonna cause the global liquidity to even rally higher. And when the rate cuts go below 5% or 4%, which where they are at right now, a lot of money is in sitting in these.
I ain't gonna cap. We is dependent on the rate cuts too, chat. It's like we dependent on Trump and rate cuts, bro. And Trump even showing us the last boss of that, these interest rates.
And earn as well on the price appreciation. That is
what's good with Gig, man. What's up with it?
Regarding that, but that's one major thing. For those that do not know, when Ethereum rallies, everything else pumps. This is pretty much like Bitcoin pumping, altcoins pumping. Bitcoin pumps, needs it to pump. Then when it pumps, other coins pump. So that's how it is, guys. How I'm seeing it. I'm seeing it this last rally. It's gonna last. It might last. Once it starts in the global liquidity, gonna go nuts. It's gonna last for a few months. It's gonna be heavy. We're gonna have a very strong bull market like the one that we've seen previously. And since basically since the bear market, this rally here was pretty much a front run rally. That's why it feels kind of off. Why we topped too early as well. People calling for tops too early. We for the first time Bitcoin actually made a new all-time high before the halving. And as well, this was a narrative front run when since we had the Bitcoin ETFs happen right around here and got everybody bullish, and as well the rumors around the Bitcoin ETF started to happen right around Bitcoin 30K. So I assume that Bitcoin should have never actually went that high until the post-halving year or until the halving year happens. And it did actually rally that high because of the Bitcoin ETFs and all that caused all this front running to happen in the space, while altcoins actually did not follow that. So that's one reason why people have a hard time believing we're gonna get another major rally, which is retail driven, which is
I bought more EHEX today and Bear
and liquidity being injected
and PulseChain.
That we had in 2021 when the global
that's what I got today,
and 2017 when the global liquidity was high as well. So that's very important here, guys. Anyways, that's my message for today's video. Stay tuned, hold your bags, stay strong. Bull market is coming, or I might say the strongest part of the cycle is coming. Heaviest, most strongest wave of this cycle. Anyways, guys, thank you so much for watching today's video till the end, and I'll see you on the next one. Cheers.
So last night he used him. Honestly, nothing better.
quick knowledge on some shit. Let's lock in, chat.
Is exempting phones, computers, and chips from the new tariffs. Now, if you've been keeping up, this guy smacked 125% tariff on China. And he's like, you can't import nothing into this country no more. It is what it is. And now he's like, but okay, wait, hold on. Wait, oh, but you can bring the technology. It's okay. The chips, the flat screen TVs, that's okay, but nothing else. Now, obviously, Apple is going to be happy about this because they were about to be eliminated from the planet, right? They were about to like, their hands were tied. They're like, bro, our company is in your hands, Trump, like 125% tariffs. We ain't getting no iPhones this Christmas, right? So they're happy about it. But the question is, what about for investors, right? And that's what I'm going to talk about in this video. Let's go into the deeper perspective of my theory of what I believe is going to happen to the market. Now, this is not financial advice. You do what you want with your money, but I want to show you what I'm doing with my money. So just to be clear, this is not like random fluff news. This is actually real. He's excluding a lot of technology, including smartphones, laptops, memory chips, semiconductor manufacturing equipment, flat screen TVs, tablets, desktop computers. They're all exempt, okay? All those Chinese imports, all of that equipment It's exempt from the 125% tariff that Trump is putting on China. This is real and it's significant. As you can see, 55% of all the total imports from China are technology. So this is a big exclusion. It's not a small exclusion. This is huge, right? A lot of relief on this tariff pressure. And it really just shows kind of a little bit of flip-flop nature back and forth of Trump like threatening people and then seeing how the market reacts and then relieving it and it's like this volatility, which I believe is uncertainty in general. So we could get like a little relief rally, but I don't think it's sustainable. Hence the title of this video. Don't get finessed. If I were to explain it like from a story perspective, it's basically like you're driving a car. The engine is smoking, there's fire in the engine, and then somebody just turns up the music in the car and plays like really loud worship music and just distracts her. Oh, everything looks great. But at the end of the day, underneath in the engine, there's a lot of issues that are persisting right now that Trump has to deal with as a president. Band-aid solutions and hype only trick the everyday person. It's marketing gimmicks. But what's going on under the hood? Like, what is actually going on? And I want to talk about the credit system.
This is why I don't trust that new Teddy shit. Exactly, because everything down. Why the fuck that shit pumping, gang? That shit bound to reverse on your ass, boy. Don't trust none of this shit pumping. You feel me? Protect your money, man. Wait for the real leg up in crypto, man. Wait for the real move. Don't chase none of this bullshit, chat.
I believe this is the most significant variable for our economy, especially risk-on assets like crypto and stocks. Like right now, crypto and stocks will be affected by this credit system. And there's kind of like this tariff thing going on. The tariff thing was putting pressure on the credit system. And this is why I believe Trump is taking a step back. He's realizing how catastrophic this tariff policy was. The entire market dropped substantially. And now he's going back slowly but surely on his word to a certain extent. I don't know for sure. I don't know all of the details, but what I do know is he got extremely aggressive and he's like, oh, wait, hold on. 90-day exemption. Oh, wait. Oh, but China, the 125 that we were aggressively attacking you with, you can bring 55% of everything you import. We'll exempt that. You're good. But do you see what I'm saying? Like, do you see what I'm saying? This one chart right here really exposes everything. So I want to go over in great detail slowly. For someone that doesn't understand anything about math, I'm going to break it down for you. You're going to understand it after this. And this is my main investment thesis. This is kind of the core of why I've been so bearish. And
no, facts. Everything down. Everything is down right now for sure.
So I believe that this chart right here even has some type of prediction qualities of these like crazy events like tariffs or like black swan events. This could predict that. And I'm going to go into extreme detail about it. But first, you have to understand the dynamics behind it and why it's important. If I just throw up a chart like a lot of people do on the internet and I don't explain to you why it's important, well, it's just a chart. So what is this? What we're looking at is the S&P 500, which is a basket of the top 500 assets on the stock market, right? Top 500 companies, right? And the bottom is the federal funds rate, which is interest rate policy. Now, we're going to understand the dynamic between them because the S&P 500 is basically like saying crypto. This lines up directly with crypto, almost identically. And I'm even going to show you this chart in comparison to cryptocurrency specifically. So let's go into what interest rate policy is. So the first thing you have to understand is the federal funds rate. So the federal funds rate is controlled by the Federal Reserve. The Federal Reserve is kind of like this private weird corporation thing that controls all of the money in our economy. The government does not control it. Trump cannot control this at all. He has no jurisdiction into the Federal Reserve at all. It is completely separate. He cannot say anything about interest rate policy, right? So it's like this weird private corporation that was created by all of these big private bankers, including JP Morgan, right? And they control the federal funds rate, which is an interest rate that banks charge to each other overnight. The FOMC, or the Federal Open Market Committee, adjusts this rate to control the economy. Now, the next time we're having a meeting is over here in May 6th to 7th. So next month, we are going to have a meeting and they're basically going to come out and say, okay, interest rate policy is going up down, or staying the same. Now, this one variable, I believe, controls the entire economy, and it is the most important, the cream of the crop above every indicator, signal, metric. It is the most important variable for risk on assets like stocks and crypto. It controls all of crypto on a longer time horizon, not on a daily. On the longer time horizon, it controls all of crypto trends, and I want to prove that in this video. So let's go through the process a little bit. So when the Federal Reserve lowers interest rate, right? Just think about it, right? So let's say hypothetically, I don't know, you want to loan your friend $1,000 at 5%. That means he has to pay you 5% back, right? So when they lower interest rates, that means that banks can borrow cheaper, meaning like if they lower it to 1%, now you can borrow way cheaper, right? And more lending happens. So the banks are like, okay, we can borrow for cheaper, so we're gonna actually loan out money to people, businesses. We're gonna do it way more aggressive. We're gonna loan out way more money because we're getting it for cheaper. So like they're borrowing it and loaning it out to other people, right? So loans increase. There's more money, but not real money. There's credit-based money. And this is the difference. And this is, I'm telling you, there's a lot of people showing you guys like the M2 money supply, and they're always talking about liquidity. They're wrong, okay? Liquidity is important, but this is way more important. This is above the liquidity. So it's not real cash. It's debt-based money. And it only exists because somebody owes to it, right? So the supply of credit goes up, spending goes up, and asset prices go up, meaning they drop interest rates. There's a whole bunch of loans being taken out. People are taking out debt. They're buying more houses, et cetera, et cetera. And all of these assets, risk on assets like crypto, the stock market, they go up. Now, it's not exactly like that. There's a timing kind of explanation that you'll get in this video. Like the timing is everything. Okay, it doesn't work like that perfectly. But in general, that's how it works, right? So when the Federal Reserve rises interest rates, borrowing gets more expensive, credit slows down, there's less money that flows into the system, spending drops, and asset prices fall, right? Businesses come back, unemployment rate, recession risk increases, right? There's just less credit in the system, so people are not taking on risk, right? The economy runs on credit, not cash, and I'm going to show you that right now. But first, let me explain to you all these other metrics, right? Because you see unemployment, you see the CPI, you see the M2 monetary supply, all these things, and people talk about it, but they are all byproducts of the interest rate policy. For example, inflation is usually defined by the CPI. You've probably seen this before. There were some recent numbers that dropped like 2 or 3 days ago, right? And this is the actual mathematical formula, right? So this is the CPI inflation rate equals this month's CPI minus last year's at the same month, right? So it's not even the CPI, it's the rate of change on the CPI. And this tracks a basket of goods and services. So when they say inflation, they're not even talking about the monetary supply inflating. They're talking about the cost of goods going up. So there's like, they basically take like a whole bunch of goods and they put it in a basket and they create one number based off of that basket of goods. And if the basket of goods is going up, that means inflation is rising. It's the cost of goods. And it's a lagging indicator. It reacts after credit has already expanded or contracted, okay? Hear me out. It's a lagging indicator. We have to find predictive indicators, not lagging indicators. I've even heard of people referring to the DXY. So for example, the DXY is the dollar's strength on the world, right? And this is measured by comparing the dollar to other foreign exchange currencies. So when rates rise, in the US, dollars become more attractive and foreigners buy dollars because there's less credit in the system. And this is not exactly perfect. This is just kind of like dynamics to explain it to you, right? But when rates drop, dollars are less attractive and the DXY drops. Again, not a perfect formula, but this is meant to show you that, again, it is all based off of interest rates, not the strength of the dollar. The strength of the dollar is a byproduct of interest rate policy. If we had a finite supply in America, I just want to add kind of like my 2 cents on this. If we had a finite supply, meaning there was a limited supply of US dollars and there would never be more printed ever again, which is not the case at all, right? This is not the case, right? Then that means the DXY, in my opinion, would have more relativity to the S&P 500 and risk on assets. I would take it more serious. But being that there's an unlimited supply, the dollar strength is pretty much irrelevant. It's the credit system. I'm telling you, it's before. Again, dollar strength is a reaction. Interest rates control capital flows, and that's what we're looking for. We're looking for the faucet. Where's the like the money coming out of the faucet? That is what we're looking for, not the byproduct. I'm looking at the faucet because that will give us our predictive metric. So let's go into an overview so you understand this dynamic. You really have to understand it. It's one of the most important variables, right? So the first thing is the Federal Open Market Committee, right? The FOMC sets interest rates controlled by the Federal Reserve. This changes the cost of borrowing for banks, which affects how much credit banks issue to people. Listen, right? Listen, the vast majority, like if you buy a house, the majority of your money is being spent in credit, not, it's being set in credit. You're not buying a house cash. Most people are not buying a house cash. So credit is a big portion of someone's life, right? Number 4, there's
credit is bullshit to me, Chad.
More debt-based money enters the system, not legitimate money. This is where people make huge mistakes. They think that the actual cash is the thing you should be looking at. That is not the case. If you look at every economic crash, the dot-com bubble, the housing market crash, and COVID, it was all credit-based. It was all credit-based. It wasn't like the M2 money supply. No. It wasn't like global liquidity. No. They are all like literally after this. That's what I'm trying to explain to people, right? More spending equals higher asset prices, eventually shows up in CPI inflation, and inflation data influence public sentiment and policy reactions, right? By the time inflation shows up, this is why this data is so irrelevant. The credit cycle is already in motion. Everything is a byproduct, including the liquidity in the system. Listen to what I'm saying. Everything is a byproduct of credit. The banks use credit. And I'm going to boil it down to a fundamental belief that I have. So this is not taken from like any like data. I'll show you what I'm saying. So right here proves what I'm saying. The M2 money supply, as you can see right there, is 21 trillion, but the total credit and debt market is about $50 trillion. It is literally bigger than all of the money we have right now. Like literally the credit system has more checks and balances and more fake dollars than our actual fake dollars. Right? So this is what I'm trying to explain to you guys. It's not all about liquidity when you understand it's dynamic. It's the thing that makes the liquidity start, right? You have to understand this. So this is my fundamental belief of why I believe, and just bringing it back to timeless wisdom from the Bible, right? The borrower is slave to the lender. So if you think about society now, it's all just these power control vehicles, right? It's everybody trying to control somebody, right? So like whoever these elite are, they're trying to, I don't believe they have ultimate control, but in the physical realm, in the physical world, the spiritual is different. In the physical world, the devil has control over the physical world, and he uses this to enslave people. Back in the day, they used to physically enslave people and force them to go build, like, for example, a monument. And they would, like, wage war on, like a nation right next to them, take their people and be like, hey, go build something, right? Now, we are enslaved through money, specifically through debt, right? And even more specific, through the interest payments. For example, if I take a $10,000 credit card, right, and it's like 2% interest, they do not want me to pay off the $10,000, because if I pay off the $10,000, they stop getting interest payments. So they're going to do everything in their power. These people do not want the debt to be erased, because that means that their interest payments are...
What whole Root's talking
Are you
about?
catching what I'm saying? No, nobody wants the debt to be paid off. Like in the background, they don't, because that means that they get no more interest rates. That means that they lose power, right? They lose the power over the slave. If you want to be truly financially independent, pay off all your debt. If you want no attachment, if you want your money to multiply, pay off all your debt, right? This is the way it works. Is a fundamental belief. It's an invisible chain. So, for example, what they do is they're like, okay, they have the power, right? Just think about the Federal Reserve. They have the power to basically increase the credit or decrease the credit at will, right? So what they want to do is they want to make the credit cheaper, then other countries and other people take out more loans, they get put in more debt, and they get more interest payments. And they just keep doing that. They want literally as many people as possible, okay, listen to what I'm saying, to take out as much debt so that they can get never-ending interest payments. And as soon as the person actually pays off the debt, they are free from this chain of bondage. So again, this is again proving what I'm trying to say, which is credit is the most useful vehicle for enslaving people to get them into doing things that you want to do through human labor. And then being that you have all this debt and you can't pay this and you can't pay that or whatever the case is, you have to work, right? Are you catching what I'm saying? It's like the cream of the crop, the tip of the iceberg of all financial markets. Which brings us to this final conclusion before we go into the chart. Right now, the United States government is enslaved to the Federal Reserve. That's how it works. I know it sounds crazy. This is a private company. Trump has no control over this. They're enslaved to the Federal Reserve. The United States issues treasury bonds when it needs money. So the United States is like, I need money. I'm going to issue treasury bonds. And the Federal Reserve buys those bonds, becoming the lender to the government, right? So the United States owes the Fed, but the Federal Reserve returns most interest payments back to the Treasury. So essentially, it's like the Federal Reserve increases borrowing, right? They increase the credit in the system. The United States is enslaved to that. Banks are enslaved to that, right? And then we are enslaved to the banks. It's like this chain of reaction. And you'll see what I'm saying. One of the most predictive indicators in the market. And this basically moves the entire risk-on economy. When it comes to stocks and crypto, this moves everything. Let me show you. So as you can see right here, this is the S&P 500, the original chart I was showing you. And this green line, look at this green line. I'm going to pull this up a little bit. Look at this green line. This is interest rate policy. This is the federal funds rate. This is what I'm talking about. So I put the green line at 2% interest, which is very low. Now we're currently sitting at 4.33. As you can see right there, that purple
Chat, they
line,
gotta turn that chat. They gotta turn this shit on, chat, man. Bound sooner or later, this shit finna happen. We gotta be prepared, chat.
Look at this increase in the stock market, right? Look at this increase in the stock market.
This shit gonna happen regardless.
I put them in, and it increased all the way to here, but I put them in this square because this white square pretty much shows when interest rates were low. Look, credit is cheap here. Credit is cheap here, and credit is cheap here. And look how it started every bull cycle. It was the beginning of every bull cycle. Since like 2000, in the modern, age, we have this type of dynamic playing out. Not only that, but when they started dropping credit, look, when they started dropping credit, right, the interest rate, this predicted all the crashes. This was a crash. This was a crash. And this was a crash. Not dropping credit, but dropping interest rates. That's what I meant to say. When they started dropping interest rate, this was a predictive factor. Because think about it. Interest rates are high. Everybody's wondering, okay, like when are they going to drop interest rates? Once they start seeing signs that interest rates are about to be dropped, they're like, okay, let me get my money out because I know eventually it's going to go down to zero, right? And this was a predictive indicator. Look at the red circles. Every time this dropped the market. This was COVID. You don't see it. If I zoom in, you can see it. But this was COVID. That dropped the market as well, right? So, in general, for a bull market to happen, we need the credit cycle to restart. And the credit cycle doesn't start without a crash. According to history, since 2000, right? This right here was the dot-com bubble. This right
That's what
here,
them tariffs
say
doing,
again,
crashing
this
the
is housing
market.
market crash, right? And this right here was COVID. And all of those crashes dropped interest rate policy down to zero. So it was basically like the Federal Reserve was like, okay, interest rates are high. Look, right here, this is the story. Interest rates are high. They gave a little indicator. They're like, okay, we're going to drop it from 5% to like, in this case, it was 6%. They dropped it to like 5.25. And then everybody freaked out. And everybody was like, all the smart guys with a lot of money, they're like, oh, snap. The Federal Reserve is now on a downward trajectory with interest rate policy. So, I'm going to wait. I'm going to wait for the 0%. This crashed the market. The anticipation for credit going to zero crashed the market. Everybody started pulling their money. It crashed the market, right? Here again, Federal Reserve starts dropping interest rates a little bit, and everybody anticipates that, drops the market, and then the Federal Reserve, right, has to react to that. So the market's falling so bad, right? So they dropped it a little bit, then the market falls so bad that as a reaction, they're like, okay, emergency, the market's falling. Let's drop interest rates to 0% so people could take out more loans, which is exactly what they want. They want interest rates to go to zero because if they drop it to zero, and it's not exactly zero, it's a range. They drop it to like 0 to 0.25. That means that people will be more enslaved. That's what that means. People are going to be more and more enslaved. So they drop interest rates down to 0 or 0.25 or whatever the case is, which you see here, and everybody starts taking out more loans and they start buying things that they can't afford, whether it's cars, houses, stocks. They start taking out more loans and buying things they cannot afford, right? You can see it right here. Low interest rates start every bull cycle. I'm going to blow your mind even more. We have never seen, this is Bitcoin's price. We have never seen a bull market in Bitcoin with high interest rates. This is since the beginning of Bitcoin, right? Right here is a high interest rate environment. This was the bear market of Bitcoin. Right here is the only time we've seen anything that was even slightly bullish. Anything that was slightly bullish right here. This high interest rate environment is the only time we've seen this. And so it is very sketchy. we have no evidence of any crypto bull cycle ever in a low interest rate environment, except for what we experienced this first year. So in general, I don't look at Bitcoin because it's such a small chart. If we look at, in general, risk on assets like this, right? In general, this, in my opinion, it just lays everything out. It just lays everything out. So the tariff policies are pretty much irrelevant. The tariff policies are like something that's very short-term stuff. You can't predict Trump's behavior and mood. We can't predict if this day he's going to feel aggressive towards China or this day he's going to relieve it from China. We don't know. But as a longer-term time horizon trader, I am not an investor, but I do trade on longer time horizons, and we're going to talk about that towards the end of this video. I do believe, right here, look, according to what we see right here,
taxes was taxing. Now taxes is relaxing.
Look, this predictive, look at this, the red circles, this predictive pattern is playing out. And look at the top. So I do believe there's going to be a crash, just to give you kind of a final prediction. I do believe there's going to be a crash, and then the Federal Reserve will drop interest rates down to 0% as a reactionary measure. Everybody will start taking out more loans again, and then we'll go into the greatest bull cycle ever. Now, this is not a bad thing. Why? We have the 4-year halving cycles for Bitcoin, right? This is 4 years, and this is great. Every 2 years, we can make a whole bunch of money, right? I mean, technically every 4, but there's a 2-year bull run and a 2-year bear run. So that's why I say every 2 years. So the 4-year Bitcoin halving cycle is amazing, but the credit cycle is even better. Why?
So we waiting on them interest rates to hit lower, chat. Like real talk, we got to.
They have dropped interest rates to 0, which is like right here. We had very long bull cycles. This is a 2,253-day bull cycle. Look, when they drop interest rates down to 0, look at that. It starts everything. Look at how long this bull cycle was. 4,000 days. When they drop interest rates down to 0, we have no problem making money. Look, interest rates down to 0.
They're going to $1.
Big bull cycle for 1,700 days. So this is actually a really good thing as long as you could detach yourself from the money. Because if they do have this crash and the credit system gets reworked, ain't no 4-year bull run. We could experience a very prolonged 3 to 7 year bull run, right? And that's what I'm trying to explain to you guys. It's not a bad thing. You just got to be careful, right? You got to be careful with your money and invest at the right time. And this is what I've been trying to say over and over again. The credit system is more important than any type of short-term Trump news. I don't trade based off of news, bro. I don't. The market is uncertain. Nobody knows what Trump's going to do. And at the end of the day, Trump is not in total control. The Federal Reserve is in total control of the risk on market. All right, so to finish off this video, I want to explain kind of my thought process. So me personally, I am a position trader. I trade over longer periods of time. So an investor pretty much never sells. They're selling maybe 5, 10, 20 years. They're like hardly ever selling. But as a position trader, I trade over like 6 months to like 2 years time horizon. And the reason why I do this is very clear, by the way. The reason I do this is because we do experience, I am a crypto trader. We experience 2-year bull run and 2-year bear markets. So I don't hold bear markets. I don't hold it, right? And so to me, the credit cycle is the biggest. Then the 4-year Bitcoin halving cycle is like right under that, right? So from a crypto perspective, we are technically in a bull run, but crypto is not in an isolated vacuum. The credit cycle is above the crypto cycle, right? So the main point I'm trying to make is, look, this whole debate of if you could sell or buy or whatever the case is, some people want to hodl. Look, bro, have peace with your decision. But just know that if you're hodling, you are moving like an investor. So you can't conflict. What happens is people make a decision. They'll be like, I'm a position trader. They're trying to hold for 2 years. They want to hold during the bull cycle or whatever the case is. But then they get very emotional. They start out like lashing out, and then they turn into a day trader because they want quick endorphin rush fixes. I told one of my friends this. I was like, I've never seen a billionaire day trader in my life. I have never seen a billionaire day trader. And there's a reason for that. Anyone that really, really makes money are not thinking on short-term time horizon. They're all thinking long-term, right? So I don't believe in scalping, day trading, and swing trading. Although there's probably isolated situations where people do well with these things. From all of my experience of being in finance for 8 years, I personally don't believe they're profitable. I see the majority of the big winners in crypto acting like position traders. The majority of everyone I know that's rich, and a lot of them way richer than me, they act in 2 ways. They're either a business owner that's building wealth in crypto, or they're position traders. That's it. I don't even see the only investors we've seen are the people that bought Bitcoin at like $5. Like, can you be an investor? Yes, but I think position trading is more lucrative. So the reason why I sold all of my crypto and my assets is because I'm staying consistent to what I believe. Now, that doesn't mean that you might believe something different, but you have to pick. The problem is thinking that you're an investor, but then flipping to a swing trader and then flipping to a day trader and then coming back to a position trader. That's the problem. That's how you get wrecked. So everything I've learned in crypto for the past 8 years has led me to believe that this position trading strategy is specific to crypto. It is a crypto specific strategy. It is the best one. It's the most lucrative one. It makes the most money. I use fundamental analysis with the altcoins, and I use position trading. That's it. I believe it's the best. So all of my focus is on that. I don't look at the mainstream narratives. So I completely understand that the mainstream tells you to act like an investor. They tell you, oh, just dollar cost average and all this. And I have some extreme proof that that is not the case. It does not work. And you've probably seen some of my other videos where I talk about it. I don't believe investing in altcoins is a good answer. I think it's horrible. And it's probably one of the worst because these altcoins dropped 98%, and to get back from a 98% drop, I think it's like an 1,800% increase you have to get. Like, it's absurd. It's not lucrative. It's just an excuse a lot of times, unfortunately, people use.
No, he right, Chad. You gotta invest when them interest rates low, but he got money to do that though. He has paper to talk that shit and do that. Position himself. We gotta catch them cheap prices when we can catch cheap fucking prices, Chad. No matter when the cycle finna start. I buy dips. I don't buy tops. So I've been catching nothing but bottoms. You know what I'm saying? So I'm playing the game accordingly. That's why this investing shit, you gotta really know where you at, man. If you don't know where you at, you thinking too much, you thinking too fast, you gonna wreck yourself. You gotta know where you at in these markets.
But hey, that's my official thought process. You can do whatever you want. Have peace with your decision. At the end of the day, even my thing is irrelevant. God is in control of everything. So even my strategy is not over the peace of God. Like, at the end of the day, the cream of the crop is Jesus. He even controls the Federal Reserve. Jesus controls the Federal Reserve. So like all of this is just like random, like like who cares anyways, right? I'm just telling you that as a trader, I am staying consistent to what I believe. And as a position trader, I'm holding out and I'm being patient and I ain't buying nothing until I see my interest rate policy. And that might rub some people the wrong way and you might not like it. Hey, that's up to you. Do what you want with your investments. And I love you guys so much. Thank you for being a part of
I'm gonna take that advice, Chad. I'm gonna go all in with them interest rates, crank it low. I ain't gonna cap. I'm gonna catch cheap prices. I ain't gonna lie, I think I got enough of cheap prices, but I'm gonna really catch around interest rates too. I'm gonna really go harder. Like, so right now I'm spending my time stacking. And if you ain't got no bag, you need to accumulate and get you a bag immediately if you ain't got no bag. But I got bags. So what I'm gonna do, I'm about to really stack up, feel me? and wait for these rates to smack lower, chat. Like, wait till May when these scheduled rates hit. Lock in, man. And when they lower these bitches, I'm investing, bro. So yeah, chat, quick hour stream, late night shit, man. Some quick shit. Y'all be on tomorrow, man. Around what? Daytime sometime. Y'all know how to rock, man. Lock in, chat. We about to go up, man. Rates, man. We depending on rates for everything right now, chat. We waiting on rates to lower. So take a heed right now. Wait for rates to get lower for you to really go all in, like big investment. Like right now, do small shit. You feel me? Get in position. You see good prices, grab it. That's all you want to do. See good prices, grab it. It might go lower, chat. It might go lower. We waiting on rates, man. So if it go lower, prepare yourself. Get some dry powder. Touch grass, man. Stack up. And when these rates get lower, and these, you know what I'm saying, it get easy for everybody to purchase, we in there. But we about to be set up for greatness right now, chat. We really in a good position. Bear these 90% plus drops, man. But that's where we at right now. First cycle babies, niggas ain't got riches and wealth right now. We gotta go through the pain, man. I'm going through it for sure. I ain't got 100K invested in crypto. I got my own few Ks, but we definitely making sure we buy these cheap dips. So when the prices go up, we reaping gains, man. We getting rewarded. Still loving this OG bear, man. Still loving E-Hacks. Still got the same bags. Play the game accordingly, chat. Let's get it, man. Load up. Love y'all niggas, man. Tap in, man.
Came up in the jungle. I can't see none of you little niggas, Stevie Wonder. She pull up and suck it, then she lead you like a plumber.
We gon' pump May, chat. I'm telling y'all, buy May, get the fuck on, chat. I'm telling y'all, lock in, let's get it.
Bitch, I do what I want, I work harder than the butler. Yeah, I'm like no other, I'm straight up at the gutter. Suburbs living now, bitch come check it out. I'm ballin' hard, I'm wigging out. I want the cash, no clout. Yeah, fuck the fame without a doubt. I'm fucking up